Okay, out of chapter 3, let's take a very easy entry. Here's D. We're working with depreciation expense. Remember depreciation expense. Let's say, for example, we're taking 5,700. Here it's just telling you if the asset was $57,000 and it had a useful life of 10 years, then you would take 5,700 every year until you depreciated it fully. Let's look at the depreciation account, which again is considered an adjusting entry. It's an adjusting entry because there's no cash involved. The only cash that was involved was when the asset was first bought. So very easy entry. We debit depreciation expense. And then probably the trickiest part of this is that you do book accumulated depreciation for 5,700. Notice in this case, 5,700 says accumulated depreciation and that's it. So you really just have no distinction. If you were depreciating, for example, a vehicle, be careful because you might have more than one accumulated depreciation account. It might say accumulated depreciation vehicle or accumulated depreciation building, whatever it is you happen to be depreciating. But this is pretty much it. Depreciation entry is pretty straightforward. The trickiest thing is just understanding how much you take that year. In this case, they just told you how much. But if it was like, again, to keep the numbers even, if it $57,000 depreciated straight line over 10 years, it'd be $5,700 a year. And this is what we're doing, recognizing the fact that the asset's not worth as much. Keep in mind that the accumulated depreciation account is a contra account. It's a contra account that shows. So on the balance sheet, you'll have the asset here, and then right below it, you have minus accumulated depreciation, and then you'll show the net book value off to the right. Hope you found this useful.